What you see here is the market health of the DAX in the short-term period. It measures a positive trend, the quality of it, and also includes sentiment signals. And as you can see, it remained very positive, which is very healthy in a bullish environment since the middle of January. Even that little diver or that little dip we had from last week made that whole market health, even on the midterm, staying positive. And I kept showing this chart in my last updates as well. You see, smart money is buying that entire DAX rally since the end of November. We had a little diver here into December, but then the whole rally until the all-time high was being bought by the big guys. Now we had a little diver, even smart money pulled out significantly, but I think it's just a little correction into the next months before that rally continues. Let's hop into it. Okay, let's have a look at the DAX H4 time frame. It's a JFD indication, and I would like to talk about Elliott waves a bit more this time. I don't really like them that much because usually they are very speculative, but they explain what's happening right now very well. While looking at the smaller time frame, that's what we have right here, and if we compare that to the bigger time frames, they all have something in common. And what we keep seeing is impulsive structures, five-wave structures to the upside only, and it keeps happening in the smaller time frame, and it happens on the bigger time frames as well. For instance, let's have a look at the latest impulse we had, which started on the 3rd of February. We have seen a clean 1, 2, 3, 4, 5, wave 2 and wave 4. They were both in a triangle pattern as a consolidation. They didn't even fake to the opposite. They just popped straight up and kept going. Now on Wednesday we topped out at 22,936, and then out of a sudden selling pressure came in with almost 600 points on one a day on Wednesday, and then it kept going in a kind of zigzag on Thursday into Friday. We have already a bullish Wilbur wave wedge here. We have already a positive RSI divergence on several time frames, and I define that correction range between 21,500 all the way to 22,000 for a wave 4. If the momentum remains very bullish, we're only going to see 22,000. I believe if it's going all the way down, I believe we're going to see 21,500. Now let's zoom out a little bit so you understand what I meant with all these impulsive structures. For instance, that rally which started just before Christmas, that was also a clean 1, 2, 3, 4, 5 impulse. And if I keep zooming out, this was the low of at the end of November. We have seen another impulse of 1, 2, 3, 4, 5. And now if I zoom out even more, this is the low of August. We also can see a clean 1, 2, 3, 4, and 5. A very nice bullish flag channel occurred during that time between October until November last year. And if I keep zooming out, you see even more where the journey started. And we take the start here on the 3rd of October 2022. This is the start of that big wave 3 in my opinion. The Corona low was the start of the entire new impulse. We have seen a very long one and then a quite large correction into wave 2. And now wave 3 of wave 3 started right here in October 2023. We have seen another 1, 2, 3, 4, 5 This is our wave 1, and now it's going for an A, B, C correction. It was also a large descending broadening wedge. We got wave 2 of wave 3 here, and now the biggest of all waves started, which is wave 3 of wave 3 of wave 3. I know it's getting a bit confusing now, but this is the strongest waves of all, and we are right in the middle of it. And we're gonna subdivide it into 5 waves as well. And what we have seen is the first wave, the second, and we are in that third wave right now, in my opinion. And once I scroll out here a little, this is that wave 5 we are right in, that finished last week, and that also finished the smaller wave 3, but we are still going for a wave 4 and a final wave 5 to finish the wave 3 of wave 3 of wave 3. And then I think we're gonna head into summer with a larger correction. But I think the bullish momentum will remain throughout the entire year of 2025. Let's jump into my Discord. You see here the DAX channel. This here is a H1 thread, for instance, where most of my updates occur during the day. You find there various time frames I analyze, also for the US markets in various time frames. And if you want to be part of my community, you're welcome to join at jcs-charting.com. You find there 2 packages, a basic package for the DAX and the US markets. The advanced package got a bit more channels, a chat room if you want to look over my shoulder, how I position myself, if you want to post there as well, and if you want to have an analysis on the specific stock, I do that on request whenever I find time. Gold, silver, Bitcoin is also included, Forex on request as well, and so on. And of course, it's no financial advice. It's for training purposes only. I only show you what I do and see. But let's hop back into the Discord. This here was an update on, let me see, the 20th of Feb. I had a sequence and I thought we're gonna see 22,663 first before we actually come down. Our red sequence triggered at 22,418. This didn't happen. I came up with another idea later on. That flag channel here, by the way, got never confirmed. However, it broke down just a few minutes later. Remember that 22,418 got triggered for a min target area of 22,278 and 22,221. And yeah, DAX was being a little pain. You know what I mean? It pulled up straight away, went back to that EMA 18. But it came down a little later, and then on Thursday, just after 5 p.m. German time, it hit our first min target 22,278 on the dot. And here you see how accurate these sequences work. Overnight, it kept reconfirming the trend. And then on Friday, it kept being a pain, but came up with a trade setup here, and that actually worked out quite well. We still had a second min target, which has still a very high probability of being hit, 22,221. And yeah, into the afternoon, we hit that. By the way, I got rid of all my short positions. They were hedged actually, so that's why I had a much better entry level. I will talk about hedging at the end of that video because I had, even in my community, lots of questions about it. And here you see again how these levels work. The 138 initially reacted very nicely in the evening. We went down a bit further and triggered that bullish with a wave wedge in the evening. I made an update, but that's for members only. Let's talk about seasonality. It's gonna be the same for the DAX and the US markets. In dark blue, you see here the present or the current price action of the DAX. And this line here, that blue line, represents the average seasonality for the DAX. So this one here wants a low in mid-March. And it's such a coincidence that the high here was suggested on the 18th of February, and that was the actual high at the DAX as well. The red one considers the presidential year of the United States. The data is from the Dow Jones only because it's such a long index and it's the oldest, and it got history data for over 100 years. And so the average is the more realistic one. And this one here actually suggests a low at the end of February, around the 25th already. And then it continues the bull run already into March. Just to keep that in mind, we talked about that wave 4. It could be a sharp, quick one here into the 25th of February instead of the regular drawdown into March. Let's talk about the S&P 500. It's a 4-hour time frame here, JFD indication. I must say I got this one wrong on Friday. We have this bullish flag channel here, very precise hits at the upper and lower part, and then it tried to break out, and we had like these two retests. They weren't that clean, and then there was another one which dived into that channel a bit more on Thursday, and then on Friday we got into the OPEX, that massive selling. There were quite large call options on the VIX, and as it looks right now, they seem to be right. However, I have that red sequence here. Obviously, it triggered at 6045 and it hit already the first min target. I think we will see in the futures 6006 being hit as well. My last number I have for turnarounds would be 5982. I still prefer that we bounce from here into higher levels at the S&P 500 before we go into a real correction. If selling continues below 5982, then it's something different, and I have to admit that I'm wrong. So any bounce from here still leaves the cards open that we actually run higher once again. Nasdaq 100 4-hour time frame as well, JFD indication, and I had that symmetrical triangle here in red. Here was the third touch where we triggered, did the typical pullback, and then it escalated around that upper TL. It did a very nice kiss and goodbye, and then it popped up to new all-time highs. On Friday, I thought we are going for a descending broadening wedge correction, and I also have a suggested subcycle low in the time frame of Friday and Monday. By the way, the same for the S&P 500. Even that selling looked quite strong. It's the same as the S&P, what I just showed you. Here, I don't really want to see prices below 21,550, but if it does, I still assume there is a temporary bottom on Monday, and we could see another rally of 1 to 3 days after that, and then from there we will see in what direction they want to go. We had that blue sequence here triggered at 21,655. We did a very deep pullback. It's almost untradeable, I have to say. But we hit them in targets, and we had also that sequence here triggered at 21,903, and this one failed so far to hit them in targets of 22,292 up to 449. There was also the first target of that triangle pattern. So I must say I was a bit too early buying longs, I must say, on Friday evening. So we'll see what the Monday brings at the Nasdaq. The last one of the US market, the Dow Jones Industrials, again 4-hour time frame JFD indication, and yeah, a couple of weeks back I came up with that M top, and it was a very large second half of that M, as you can see, and there are targets at 43,140 and 42,533. However, there's this hidden bullish Wilbur wave wedge here in blue, and the Dow is also in the middle of a sub-cycle low. And we were hitting quite precisely 43,326. Remember, the JFD indication is a bit of the cash price, so keep that in mind. We were retracing 50% of that rally we have seen at the Dow from mid-January until the double top at the all-time high. So these levels I like to bounce, especially when the cycle, in this case a sub-cycle low, which is a smaller cycle, is due. So be aware, I'm basically all done with my targets at the Dow Jones. If we keep dropping, 43,006 is a very important number, which got also a very high potential of being good for a bounce. Yeah, this is gold. Gold had at the top here at that all-time high we made at 29.54, a symmetrical triangle, and it keeps oscillating around there. My min target 29.49 got hit on Thursday, so I'm basically done with gold. I also closed all my positions at gold. We made over 300 points at gold. Our entries were around 2,600. I still have an upper target, the 161.8 at 3019. It still has a 66% chance of being hit here. So either this number right here or this, I think we're gonna see the primary cycle top. And usually these primary cycles at gold, they top between week 12 and 15. 13, and we are already in week 15, which is on the very far expanding side at gold presently. So I assume we top out here either at this or this level for a major correction into March. And the last one for today is the Hang Seng out of Hong Kong. It's a banking or the financial index there. It's not a tech index, what most people think. Half of their components are actually financial institutions. And this is our big monthly chart. I came up with that month ago, sometime last year in spring. This here is that potential descending broadening wedge. And we are missing the last point here, the last hit at that upper TL. Around at 27,800. We positioned ourselves quite early when we were going in that two. You can also call it a double bottom. It was a higher low. And here we bought actually our positions, and also here and again here. And you see there's a total breakout now occurring at the Hang Seng. In my understanding, also wave 3 as shown right here. And I assume that the Hang Seng is continuing as rally like Europe. And then we move into a bigger correction into autumn of this year. And let's talk about hedging and money management. I got asked that quite a lot in my community and also on X. And in my community, I try to explain already a few things, but let's start off with money management, especially the size of your position. I have read people using 30%, 50%, or even all in 100% of their available cash, which is absolutely reckless in my point of view. Everyone has to decide that for themselves, but me for instance, I use 0.5 up to 1% for each position of my available cash. And for instance, we had, if you have watched my last update, I was going for a topping formation at the DAX. All my indicators were flashing, and I said, I'm going to build up a short position. I did, and at some point I realized I was wrong and I need to do something. And now if you're in with 50%, you're incapable of doing something, and you need to do something if you run out of balance. If you only have, like, let's say 5% of your available cash in the market, you're always capable of doing something at least. And now hedging comes into play. What is hedging? Hedging is basically nothing more than driving uphill with your parking brake on. You're obviously on the wrong side and you realize it's a bit too late. You have two options. You can hedge or you can simply close your position and accept the loss. I decided I hedge. I hedge quite a lot, and it takes a lot of experience and courage to do it because it is very, very risky. I got asked, why don't you just hedge the same size you're already in? Means, if let's say if you are in with 100 euros, why don't you hedge 100 euros? It doesn't do anything. It simply freezes my position and it doesn't get me anywhere. So I see it the same if you can just simply close your position and accept the loss. So that's why I take in hedging the double amount I'm already in. That means I take twice as much of my shorts I were in already against that short. So I go long with twice the positioning. I had actually quite a lot positions in there, so I had to buy quite a lot of call hedges, which got me out of that situation. And I did it actually, I counted 12 times. 2 of them only worked, where I actually took them out and I dragged up my short entries. There are 2 options. Either you hedge until you reach your break even, or you just sell them, your hedges, and you drag up or pull up your short entries in this example. And that's what I did. And I lifted them up that much that I was able to sell them on Friday evening, and I actually made profit with it, and actually made quite a lot profit with it. But again, it needs to have, you need to have experience on it. It is a very risky tool, and I don't want to recommend here anything. You need to know it on your own. Yeah, that's about it. I hope you will like this update. You can leave me a nice comment or a thumb up. I'll give my members more updates tomorrow, especially on the US markets. I was quite off there on Friday, but yeah, Smart Money is doing actually very interesting things there, so they get an indicator update there tomorrow. I also have a couple more on the DAX, and yeah, I see my members on Monday, and I wish you a nice remaining weekend. Thank you for watching, and bye-bye.